It's time to talk markets, and to discuss this, I'm being joined by Mr. Rotimi Fakayejo, who is on via phone. Mr. Fakayejo, good afternoon, sir. How are you today? The market is down 0.08%. Losers, Guinness, ABC Transport, U Capital, O&O, NGX Group. Gainers, Unilever, Stanbic IBTC, University Press, Sovereign Insurance, Royal Exchange. What's your reaction to the performance of today?
Well, I think the performance today is, we can say it's lackluster, because when you look at the total value traded today, it's less than 1 billion. So it's an unusual trading day. Most other times, the average for the day, for the daily value traded, is usually between 2.5 and 3 billion. But today it's less than 1 billion. So it's an unusual trading day. But good enough, we are not seeing the Ocean index coming down significantly. It's less than 0.01%, it's less than 0.1%, and that is still acceptable. But what we need to know or clarify from that is that the liquidity within the system is very, very tight. And as such, is something that is giving a lot of us concern. We expect that with the money changing hands and whatever, I mean, with the renewed phase of the Naira coming up, we expect that more funds should have been finding its way into the equity market, but we are not seeing that yet. So we hope that it will take a new turn. But for now, I think it's just good enough that the market is still fairly stable as it is.
Thank you so much, Mr. Fakayejo, and enjoy the rest of your day.
You're welcome.
Effiong is in the house.
The flat trading in the market is largely coming from the losses incurred by big companies like Guinness, Access Corporation, and Dangote Sugar, and all of them leveling the markets down to 0.08%. We have seen the markets, in this weak trade for some time.
Yeah,
we can understand the reason. Only yesterday, inflation rate came out, and we saw it moving above 21%. And that alone, it tells an investor that he needs to look very well before he leaps, calculate very well before he applies for anything. So what we see, the pressure now is many trying to see a window to take off their investment and sit on the fence to still calculate and look and predict where to go. And then marry again with political activities so that you will not be able to advance one side and then you lose out at the other end. So market now is being directed inversely by political activities. We cannot neglect that. We have to understand it. So for now, cautious trading will still remain in the markets.
All right, talk to us about the volume and value for today.
Volume, very low volume, very low, just about 87 million units of shares, valued at about 800 million naira, not up to a billion. That's to say that activities in the market today, very, very low. We've not seen, very low level like this in recent times. But it speaks volume of what investors, are foreseeing. And so they are still very, very cautious.
Thank you so much, Effiong Ekop, there for your time as usual on the show.
It's a pleasure to do.
All right, outside our shores, Asian stocks were mixed today while the US dollar stabilized and treasury yields remained depressed as investors try to assess the outlook for Federal Reserve's policy following stronger than expected retail sales data. Japan's Nikkei changed slightly, recovering from early Wall Street-inspired losses, while the broader Topix index was up 0.4%. Hong Kong Hang Seng tumbled 1.35%, with its tech stocks plunging 2.91%. Mainland Chinese shares also declined, with blue chip falling 0.57%. Australia's benchmark added 0.19%. South Korea Kospi dropped 0.58%. MSCI's broadest index of Asian Pacific shares outside Japan slid 0.77%. US E-mini stock features indicated a 0.3% rebound following S&P 500 0.8% overnight retreat. Japan's imports in the month of October surged by more than a half from a year earlier. Slow growth in exports, which enlarged a trade deficit, weighed heavily on the yuan, recording a trade deficit of 2.09 trillion yuan in the month of September. The world's third largest economy has depended on exports of processed goods such as cars and electronics for growth over the past few decades. But Japan's policymakers are concerned more about the impact of the surge in imports on its resource-poor economy. This trade gap is said to be worse than the pain felt by households struggling to make ends meet amid currency-driven price hikes of imported goods and by import-reliant businesses facing difficulties in passing cost rises onto customers. Latest government data show that Japan's economy had shrunk between July and September for the first time in a year as imports outpaced exports, knocking off a substantial portion of gross domestic products. In another report, Indian refiners are said to be cautious of buying Russian crude oil after December 5th, when European Union sanctions take effect. Pending clarity on the proposed G7 price cap mechanism, the Asian giants, who are two of the world's top three importers, had become Russia's biggest customers after the West shunned Russian oil after the outbreak of a war in Ukraine. Meanwhile, Chinese refiners have already begun slowing down requests from Russian oil imports. The reduced buying by most countries will leave Russia chasing alternative customers, potentially depressing prices, even if those new buyers are unlikely to join a plan by rich nations in the group of seven, G7, to cap Russian oil prices. Crude oil prices slipped today, pressured by ears and concerns over geopolitical tensions and Chinese demand worries, although signs of tighter supply, including lower U.S. inventories, lent support. U.S. West Texas Intermediate crude experiences a downward price margin of 0.92%, selling at $84.80 per barrel. Brent sells at $92.33 with a downward price review of 0.57%. Bonnie Light sells for $91.97 with a price decline of 1.26%. For the OPEC basket, crude dealers are offering $91.16 with a downward price review of 3.45%.